And, start, huh?
Ah,
Tell me something about yourself.
yeah. So basically, my name is Shivam, and I'm born and brought up in Siliguri, West Bengal. So where I've completed my schooling from. So then I moved to Calcutta for my colleging BCom from St. Xavier. I have completed that from St. Xavier's College, Calcutta, and have done articleship from Loda and Company, which is one of the top 10 audit firms in India. And then I joined Deloitte after completing my CA in second attempt, and joined Deloitte as a fresher. And after where I have done, I've got the exposure to various kinds of audit, statutory audits of listed companies and private entities. And currently I'm working as a manager in Deloitte.
What are your major observations during this tenure?
Okay. The major observations which are noted in some of my clients are like relating to cutoff sales reversals. Like in one of the case in a manufacturing company, the when we did the sampling analysis for some of the post cutoff analysis for the sales, we had observed that uh, the gate through the gate register and register that the goods where the control was not transferred to the from seller to the buyer as per Index 115. So there were some transactions recorded based on only on the invoices, which the client subsequently uh, agreed to reverse, and there was an impact on the sales for the client, which was one of the observations which we had been noted. The other observation which I had found out in one of the similar client in the same client was regarding the the physical verification adjustments for fixed assets. So there were some inventory and fixed assets physical verification which we did for the particular client, and we noted that there were some discrepancies which were noted. So the client had to make the adjustments in the books for the same.
Yeah, how will you perform a audit procedure in cutoff? What are the procedures you'll perform in cutoff of revenue?
Yeah. Yeah, so basically for revenue cutoff procedures, there are two things. One is pre-cutoff and post-cutoff. So basically, we will see what is the inventory cycle, like the number of days which the inventory, the manufacturing company for which we are auditing, how many days it takes for that uh, inventory to roll to go to get dispatched. So accordingly, we will take that cutoff. For example, if it takes 7 days or 15 days according to a particular company, we will do a post cutoff and pre cutoff analysis, cutoff analysis. So we will take the sales ledger or the sales dump for the last 7 to 10 days of the accounting cycle. For example, the March is the year end for one of the clients. So we will take the cutoff of our like suppose the sales register from 25th to 31st March, and for post cutoff we will take it for 1st April, from 1st April to 7th April for post cutoff, to see and to check whether the control as per the definition of Index 115 has been transferred for all those cases for which the sales has been recorded for this for all these period, the post cutoff and the pre cutoff period. Similarly, if there are any export sales, we have to see whether that has been done on a FIFOB or a full control has been transferred or not transferred, and accordingly the revenue has been recognized properly and appropriately or not.
Why you want to join FDD profile after being in so long in audit?
So basically, what I understand is that FDD is similar to audit, not a different thing, but just with a mix with a more detailed investigatory audit from a different angle. Like the audit is done from an angle of for giving a comfort to the stakeholders as an opinion on the financial statements, basically on a compliance per se that uh, that the financials has been prepared as per the reporting framework is normally done, which is an investigative audit done from an investor's point of view. to see whether the buyer who's interested to buy a company should invest in that particular company or not, to see the operational angle of that company, whether the company is operating properly or not. So basically, I have an interest on this and interest in this angle of audit, the analytical part of it, and I have been trying to get into this. So I got an opportunity for this interview, and I'm interested to join FP.
You have done some clients like I see in Narayana Surgical Hospital Private Limited. What were the different revenue streams
Yeah,
of this hospital?
yeah. So there are different revenue streams for this particular client. There patients and the sale of medicine and the other consume other
Your
in
internet
the first
connection is not okay, so you need to improve on your internet connection a little bit. Actually, internet connection is unstable at your end, I guess. Mm, little bit.
can you
Okay,
hear
so
me now?
yeah, it's okay. Yeah.
Okay.
What is the key risk you find out in this hospital? What are the key risks that in
The
this
key
hospital
risk
sector?
was one was relating to the revenue recognition, because there are as on the cutoff period, the cutoff date, as on the end of the accounting period, there are a lot of patients which are still in the hospital and for which the billing has not been done. So there is a challenge in recognition of the revenue from that angle, as to how much of the percentage of the revenue should be recognized for such patients not been dis- who have not been dis- who have not been charged, but like are getting the services from the hospital. So there is a service which has been already given to such kind of patients, and also the inventory has been consumed, like the medicines has been consumed for such patients. So normally the hospitals follow a particular like unbilled revenue kind of thing, where they according to some assumptions, and based on the historical trends, we take up a particular percentage for that, how much should be recognized as a revenue as on the date of accounting period, the end of the accounting period, as to how much percentage should be recognized for all such patients who are admitted in the hospital. So which is one of the challenges. The challenges is that the assumptions has to be proper, has to be checked properly, seeing that the assumptions which has been taken by the client is proper, and the revenue has been recognized appropriately. So which is one of the I think key risk which we have relating to revenue recognition in this hospital industry.
What are the three important deliverables in FDD?
The three important deliverables in FDD are: the first one being the quality of earnings or EBITDA, adjusted EBITDA. The second one being the net debt position of the client, and the third one being the net or normalized working capital which is required to run the business.
What is normalized working capital?
The normalized working capital is the working capital which will be required by the suppose the buyer to run the business at the same level as on the acquisition date, as before the acquisition. So whatever was the capital to use to run the business at that level, same working capital is known as the normalized working capital.
What are the risks that you will be doing check, okay, before investing a huge sum of money into a company like a hospital sector?
uh, some of the analysis which I would be seeing would be: one would be on the revenue trend. How is the revenue trend? Whether the what is the inflow, like if there are two streams of revenue as inpatient and outpatient, so what is the year-on-year growth on the inpatients revenue and the outpatient revenue, whether the hospital is more dependent upon the inpatients or the outpatients, which is like the OT, the normal day-to-day OT OT for that. So what are the key, whether the revenue has increased over the last historical 3 years or not, whether there is a increase or a decreasing pattern. So that is one of the check which which I would be doing. The second one would be on the EBITDA, whether the adjusted EBITDA of the company is increasing or decreasing year on year for the last 3 years. If the company is in a loss, and whether there is a decreasing trend in the EBITDA or in the revenue, then it is a red flag for investing in such kind of a company in hospital sector. So revenue and EBITDA should be increasing majorly if I look from an operating angle to invest in such kind of a companies. The other angle which I would look at would be whether the debt equity ratio of the company is high or low. So it would be beneficial to invest in a company where the debt equity ratio of the sector is low, since there would be a less interest expense if your debt equity ratio is at a lower end, and you would be earning more profits in this sector. So that would be the other check which I would be doing. The third thing would be the data turnover ratio, or day sales outstanding. I would be seeing how much is the day sales outstanding, and what like how much for how much time it takes for me to realize my sales, my debtors, because that is one of the major thing in the hospital industry, because there are a lot of customers, or the patients who depend upon the insurance schemes. They take a lot of insurance schemes to get the treatment from the hospital. So there is a time period which the hospital normally has to spend to get this insurance claim from the government, or from any other third party who are sponsoring such kind of patients. So I would see what is the turnover days for that. If the turnover days is very very high, then which means that my capital would take a lot of time to turn around, and it would be a stretch on my working capital. So that would be one of the check which I would be doing to ensure that before investing in that company.
While analyzing a revenue of for example, our steel sector, what are the analysis that you will be doing while analyzing a revenue? Steel sector.
Okay. Steel sector, you mean manufacturing of steel sector, right?
For example, you're doing an audit of a Tata Steel and you will have to analyze their revenue. What are the parameters you will be checking from a FDD point of view?
I would see whether the revenue has increased.
Okay, from an audit
Yeah.
point of view, from FDD point of view, what will be the difference that you will be analyzing through Tata Steel?
Yeah, so from an FDD angle, I would be looking at whether the revenue has been increasing because of the price or because of volume. Because steel being one of the sector where you have a lot of government regulations, and the price is dependent upon all this regulations. So if there is an increase in revenue because of such price increase by the government, so which means that the companies the revenue has not increased due to the effective operations, or increase in growth of the business of the company from an operating angle, but rather on a increase because of the price fluctuations which normally happens, which is a kind of like instability of prices. So I would see whether the volumes has increased to that extent for the last three historical period or not, to analyze the revenue, which would be a more insight on from an FDD angle. And from an audit perspective, you normally just do like kind of analysis on the customer, like breakdown of the customer wise, or like breakdown on a geographical level wise, and just see whether you have supporting for all those things, or all those, the more from a documentation or a compliance angle in audit.
What are the analytical procedure you have performed in revenue?
uh, there are a couple of analytical procedures which I had done from one of the manufacturing client, Hindustan National Glass, which is a manufacturer of bottle glass bottles, which it supplies to, which has its customer base from liquor industry to pharma industry to many other such kind of industries. So the what I have analyzed is revenue by customers, like what are the components of customer, the concentration analysis of whether the revenue consists of top like major part of the revenue, like 80 to 90% of the revenue is coming from top 10 to 15 customers only, or it is not concentrated and it is diluted to a lot of customers. That is one of the analysis which I have done. Then I've seen whether the revenue has been like is distributed on a lot of geographical basis, whether there is a particular geography only where the revenue is concentrated for the particular for this particular of industry, and whether there is a domestic and export, like equal focus on domestic and exports, or the majority of the revenue is derived only from domestic or a particular state in a particular from particular state. Then other analytical procedure is the price volume analysis, to see whether what is the contribution, what is the margin which my different kind of products which I have, different kind of products from which I derive my revenue. So what are the different margins of different kind of products, because that helps us in understanding whether there is a particular product which is where the margin is negative. Correct. There could be some of the products where I may have a negative margin, but I may not be coming to know about that because the overall revenue seems to be increasing year on year. So that is one of the important analysis which I have done as an on an analytical angle from revenue point of view. Then uh, yeah, to also one of the analytical procedure on revenue is on to break down the revenue into uh, uh, yeah, I think that's the major thing. Yeah.
How to check the hidden liabilities?
Hidden liabilities, you can ask management a lot of questions like whether there is any cases which is going on, any contractual cases like for your indirect taxes or direct taxes, where there is any litigation or any case, any notice which they have got from the from the income tax department. Then you can go through the minutes board minutes to see if there are any such uh, discussions which has happened in the board minutes, to understand if there are any hidden liabilities which needs to be provided for in the books of the company. That is one thing. The other thing can be to see the subsequent bank statements of the company, to see whether there are any liability which has not been booked in the on a sample basis, to see if there are any liabilities which has not been taken into account, any accruals which has not been taken into account in the books as on the cutoff date which you are taking into consideration.
How to check the unrecorded liability? Same answer.
Yeah.
Same. Uh, what is the contingent liability?
So contingent liability are the liabilities for which suppose there is a liability, there is a notice which has been received from the from the income tax department, but the opinion of the management is that they are that the liability should not they are sure about after taking a legal opinion, they are sure that they will not be incurring that liability, like they can fight that case. So they have filed an appeal for that particular case, for example. For that, in that case, that is shown as a contingent liability and not recorded as a liability in the books, considering the probability scenario and taking into account the legal opinion.
Any other example? Contingent liability.
Yeah. Other example could be contingent liability.
Letter of
As
credit,
of
bank
now,
guarantee. Letter of credit,
mhm.
bank guarantee.
Yeah, bank guarantee, credit of, yeah, correct.
Yeah.
Bank guarantee, any
Capital
bank guarantee given by
commitments.
directors of the company,
Capital
which could
commitments and all. Hmm.
capital commitments. Yeah.
Right. Um, what is unfunded liability?
Unfunded liability, for example, if suppose the company has a obligation for gratuity and leave encashment, which which will appear in certain time period, like after a particular year, particular 5 years or 10 years, and which the company has made a liability in the books, but has not created a plan asset for that particular liability. So that is the unfunded portion of that particular liability.
How do you ensure the quality of the assets?
By doing a various checks on the asset. Like for example, for inventory, you will do a check on the quality by seeing whether there is what is the aging of that particular inventory, whether there are a lot of non-moving items or obsolete items, whether the management has made the appropriate provision for those non-moving and appropriate items, and whether what is the plan the management has, whether that could be
How to check the non-moving
sold.
items? How to check the non-moving, slow-moving items?
uh, by doing an aging analysis, you will get to know whether that inventory is what is the age for which that inventory has been in the books. For example, if there are inventory which has not moved for a more than 1 year, for example, in case of the industry which I had audited, Hindustan National Glass Industries. So there was a case where the inventory had not moved for more than 1 year, a particular material which was specifically for a company, because if for the glass bottles, you have to like make a print of Coca-Cola or suppose Pepsi in that particular bottle. So that had not moved. So we had inquired from the management as to why that had not moved. So moved for a more than one year. So then we came to know that that particular inventory was obsolete, or there was some quality issues which because of which the customer had rejected that. So we there was 100% provision made by the management for those kind of inventory.
Anything else on quality of assets?
Yeah, for the other example which which I can recall of is like suppose receivables. So for receivables, we'll see whether the aging has been done properly or not. Whether the aging, as per the aging, the provision for the doubtful debts as per the historical analysis which we do, whether that historical and as per the historical data, whether the provision has been made for the trade receivables which could be doubtful or not, and as per the India's whether the ECL, whether the expected credit loss method has been taken care by the management. That will give us a insight on that the trade receivables which are present in the books is after the provision and are sure or certainly realizable. So which will give us a guarantee on the quality of that particular asset. So that is one of the example, inventory and trade receivables. Similarly, you have other assets also, like loans and advances, or um, PPNE. So for PPNE, you see whether the physical verification of the inventory has been done, or whether for the of property, plant and equipment has been done or not, whether the appropriate depreciation has been charged as per the depreciation policy of the company, which will give you a comfort over the WDV of the asset in the books of the company. And physical verification will give you a comfort on the existence of the asset. So which in turn ensures the quality of the asset of the company.
How will you do the ECL calculations?
For ECL calculation, first of all, we have to take the historical data. For example, we have to take if you are doing ECL calculation as on 31st March 2023, we will first of all see, we'll take the data of 31st till 31st March 2022, and we will see, we will divide the receivables into different buckets. Different buckets, like more than 1 year, more than 2 years, more than 3 years, and then we will see what is the trend of receivables for all those buckets, like how much of the percentage has been collected subsequently, how much of the percentage has been bad debt or has been not recovered, and accordingly we will calculate the percentage of the doubtful debt for different buckets, and then we will apply that percentage into the current receivables whatever we have in our books, to calculate the ECL, expected credit loss, for the trade receivables.
There are two, na, 12 months ECL and lifetime ECL. When do we calculate in this basis?
Sorry.
12-month ECL and lifetime ECL.
Mm-hmm.
There are two things now in ECL. 12 months ECL
Correct.
when we take, and then we take lifetime ECL. When do we take 12 months ECL? When we take lifetime ECL? You
Not sure on this.
can write it down, this one.
Mm.
Um, Okay. What are the key risks that can be found in the employees payroll checking?
The key risk, one could be on the attrition. What is the attrition rate? Attrition rate of the employees in the company. The other thing could be dummy employees. Whether there are some dummy employees which has been counted in the books, and the company is like kind of doing accounting for the expenses and increasing the expenses
How will you check
for.
that? How will you check dummy employees?
So that is done on a sample basis. We take the pay register first, and then we compare that pay register with the payroll versus GL reconciliation, as to see that the amounts are totally, first of all, the amounts are matching or not. Then we consolidate the pay register for all the 12 months to take some samples. Like we take the additions and the deletion register, and then we take out some samples from that addition and deletion registers and see whether that particular employee which has been added within the current year is also coming in the pay register from where the ultimate the payment has been made. And we also ensure whether the deletions which we take the samples of is for the subsequent month. For example, a particular employee has left in the month of June, so that employee is not appearing in the pay register in the month of July. So which is one of the checks which helps us to get a comfort over that there are not the company has not recognized the payroll expenses for an employee which is not there in which has left the company and which are not there in the payroll of the company. So TOD, the test of details, and on a sample basis kind of gives us the comfort on checking the dummy employees.
For example, there is an employee, okay, who's paid the salary also and it is appearing in the books also. So how will you ensure that it is not happening? Any other thing that you will be checking? An employee is paid a salary also and it is appearing in the books, everything is matching. How will you
Uh-huh.
ensure that? Uh, how will you ensure in this case? What additional thing
we
that
will
you
see
can
whe-
check? Hmm.
we will see the bank the payment and the payslip of the whether the payslips what is the payment as per the payslips, and that whether the
Payment is
payment
done to
has
them. Payment is done to
Mhm.
them and it is appearing in the books also. So,
uh,
but that employee does not exist. How will you check that? It is a ghost employee.
mm, okay. So what we
Payment is
can
also
do is.
done and
uh,
it is appearing in the register also. Books of account, everything is matching.
uh, uh, uh,
Attendance register, attendance leave register that can help. Attendance register, leave
yeah,
register
and
where
we can also
time
do
sheet
one more thing
register,
is that we can see the appointment letter, the date of
appointment letter, sample
relieving
checking
letter.
of some employees can take an interview
uh,
also. Some attendance sick leave register that can help.
Resignation,
Leave
whether there
time
has
sick.
been any resignation from that employee, any
If
confirmation
somebody
from the
does not
payroll team,
exist, he will not be attendance registered is something which can be tracked. Attendance leave
which can.
registered. Okay.
Perfect.
You can
Understand. Yeah,
write it
makes
down.
sense.
Uh,
Hmm.
okay, for example, if you are given an industry like an IT sector, okay, and at
Hmm.
present there is a manpower attrition there, okay. So what will you do to save that company? There's too much of attrition in the IT sector right now in manpower. They're switching
Correct,
jobs.
correct. Hmm.
If you are given a head position, how will you try to
From
make
what
sure
angle? From what angle? So, what is the problem?
for
The
the growth of
exact
the
problem
company,
being.
for the growth of the company, everybody, for example, you are in Infosys and you are in a manager role, okay, and everybody is leaving the company and going to some other jobs, okay. So what you can do to so that they don't go? What can be done apart from
One
the
of the things
monetary
which we can.
incentives?
Okay, okay. So one of the thing which can be done is to conduct a weekly program, which can be kind of a motivation program or an assurance program, and to like educate the employees on the knowledge and the benefits, and to give them a surety that the company is thinking about them, and the company the at what rate the company is growing or will grow, what are the plans which the company has, to explain that to the employees, which may give them a certain level of confidence, and to also give them to boost them up, boost their morale, and to motivate them. We can also conduct these sessions on a regular basis to just to give them a heads up about the company, like what are the future plans which the company has, so that they do not take a immediate decision on leaving the company, and they get a confidence on the company. That is one of the thing. And the other monetary benefits, or like medi insurance and all those policies can be like implemented at once, which might help in changing the mindset of the company, and help in retaining them.
Yeah. Where do you check, how do you ensure the quality of fundings?
Quality of earnings, to check the quality of earnings, first of all we have to see the we can calculate the EBITDA. Normally is the operating profit of the company, and we add back the depreciation and interest to the profit to and we can what we can do to see the quality of earnings is to see the historical trend of EBITDA, like at what rate the EBITDA is growing for that particular company over the 2 years or 3 years period, 3 year periods, which will help us in analyzing the earnings of the company, like whether the operating profit of the company is increasing, and what are the basic key drivers of that growth. To analyze the key drivers of that growth, we can analyze the basic components of EBITDA. Like the basic component would be revenue. First of all, would be revenue. The major components of EBITDA would be revenue. Then you will have the direct manufacturing cost for a manufacturing company, the manufacturing cost or cost of goods consumed. So we can see what is the cost, at what rate is that cost growing, whether that is in line with the revenue growth, the percentage, the trend of increasing it is increasing in same percentage as the revenue is increasing for the particular company, which ensures that the quality of earnings of the company is quite good. Then we can analyze the other factors like gross margin. What is the gross margin at which the company is operating, and what is the rate at which the gross margin is increasing or decreasing for a particular company.
Are you open to traveling?
Yeah.
No problem traveling. Long working hours, I don't think so will be a problem with you. Uh, I don't
Yeah,
think so.
as you know, we are from audit, so we have that deadlines in audit. So similar, ready for a similar kind of a role.
And like, how did you manage the work-life balance in Big Four, especially?
So
When did you feel
yeah,
much more pressure? As in execution role, there was pressure, or in a manager role, there was much more pressure?
I would say the last couple of months has been like a roller coaster ride for me. So the role of a manager was a complete different role when I was given up this role. So initially, I did struggle a lot in this kind of role, because the responsibility increases tenfold when you become a manager. So the pressure at the manager level is more as compared to an executor role. So you have to be very very proactive, and you have to plan your things well. To manage a team, you have to be very proactive. So I think being proactive and planning your things will helps me in executing the work and maintaining a work life balance in audit or in any other work which you do.
How did you allocate work to a person? Like, what do you see in a person before allocating? And if some person is not that great in doing the work, okay, so what do you do to make sure that the deadlines are met?
Yeah. So first of all, what I do is that before starting of a engagement of the client engagement, what I do is normally to plan my team. Like the to understand what is what is the team strength, what is my team strength, and what is the kind of mindset that different persons has in the team. So accordingly, I also try to understand the areas which they have worked upon, the particular team member has worked upon, what are their strengths and what are their weakness, what are their interests, basically. Because normally I see that some of the people are interested in doing some new areas, some are interested in doing the similar kind of roles which they have been doing. So accordingly I understand that first, and then then I allocate the work to them. And basically, the other thing which I ensure is to have a planning call daily, or a team call daily to take a status update, which helps in managing the team properly.
And somebody is not that good in meeting the deadlines, then what is the step that you take?
Uh, what I do is to regular follow up with that person, to ensure that the person also becomes a little bit proactive, and is hands on, and he understands the responsibility and the depth of the situation. I try to like make him understand that we have a certain deadlines which we need to adhere to, and the situation and the responsibility has to be taken up by him, and a continuous follow up, and to have like regular call schedule helps in chasing and getting that done on a timely basis.
And how do you keep your team motivated for long hours? That is a difficult thing.
I would say that I first of all I try that I try not to disturb them on weekdays. But as you know, audit we have a different kind of deadlines, and there are some times which there we do not have a choice, but we end up working for long hours or on weekends. So what I do is that I sorry.
Nothing. Carry on.
Yeah. So what I ensure is that to understand their personal requirements, what is the personal whether they require some personal time offs, or the personal they require some time for their self, some well-being or something. So what I ensure is that it's suppose we have a deadline for a particular client, so I ensure that the particular team member gets a enough break for 2 3 days after that hectic work, or the stretched long hours he has worked on a particular engagement, which ensures them to keep them motivated. At least they have something on the table to look forward to, at least a little bit break after hectic engagements, which keeps them motivated to work further.
Um, in case you get in an FDD profile, there will be a lot of pressure out here and little bit more challenging for you. So how will you manage that?
I would not say that it would be. See, I have been working as a manager in audit, and I know that what kind of challenges we normally as a manager face in getting the clients execution of the work. So, and FDD role would be a new role for me, so there would be kind of challenges in terms of understanding with this being a new profile for me. So I am ready to spend some in a like some additional time to understand this and to get the things done, since this being a key area of interest for me. So that is one thing which I have planned to look for, and I'm looking forward to.
Give me one reason why we should hire you. Any specific quality that we think which it can help us in our team.
I think FDD is all about due diligence and insights, basically insights and analysis, analytical point of point like analytical thing. I think since I am from an audit background, I have the caliber to get to do that analytical thing, and to give a proper insights, and I have a background. I've done my research study on how the FDD profile works, what are the key things which we need to keep in mind while doing while uh, working in this particular profile. And I am very kind of a very proactive person. I like to plan my things well. So this too, I think this quality also will help me in getting this profile, doing justice to this profile.
Do you have any questions for us?
Yeah, I have one question. I just wanted to understand, like what kind, if I'm joining as a manager in FDD, what are the opportunities which I might look forward to, and what are the challenges which what I might face, which I should be a little bit prepared for.
I think my HR will tell you about it. No worries. But yeah, the challenges will be similar to audit, but yeah, there will be challenges definitely. And yeah, you will get a lot of growth out here. I think you are very proactive, and I think if you we gave an opportunity, you will do very well in this role. I feel my HR will tell you about it. Thank you so much.
Thank you so much.